In this video, we're diving deep into the charts to break down what the market is telling us before it even moves. If you trade Forex, crypto, or indices, this is your edge for the week. Let's jump right into the forecast. All right, so we're starting off by looking at gold on the daily time frame. And right away, what stands out is this strong, sustained bullish run. Gold has been pushing up aggressively, showing us that buyers have been fully in control. Now, if we look up here, we can identify this swing high. This is the highest point gold has reached so far, and it acts as a key level of interest. It's a psychological zone where many traders will be watching for either a breakout or a potential reversal. Based on the current market structure, it's highly likely that price will continue to push to the upside and retest this swing high. Only once we get a reaction from that level, whether it's a rejection or a clean break, can we start anticipating a possible shift in direction or a deeper correction. So for now, the momentum favors the bulls, and until structure tells us otherwise, we stay aligned with that bias. Now let's switch over to the 4-hour time frame to get a clearer, more detailed view of the market. As we already established, gold is in a strong overall uptrend. And on this time frame, it becomes even more obvious. We've got an impulse move to the upside, followed by a clean correction, then another solid impulse. What we're seeing at the moment appears to be yet another correction in play, which gives us reason to anticipate that another bullish impulse might be coming next, continuing the trend. All right, now dropping down to the 1-hour time frame where things start to get more interesting. Here, we're focusing on the most recent price action. We can see a low, which is taken out by a lower low. And then that's followed by yet another lower low. This sequence shows us liquidity being grabbed below each low, something we see often just before the market makes a reversal. Now down here, we've identified a strong level of support. This is our area of value, the zone where buyers could step back in. If you've been following my content, you already know we use two types of entries, the risk entry and the reduced risk entry. For the risk entry, we'd look to enter right around this support level, getting in earlier, but with slightly more risk. For the reduced risk entry, we stay patient. We wait for a confirmed break of structure to the upside. Only then do we look for buying opportunities with added confirmation and more confidence behind the move. Now let's focus in on the current price behavior. If we observe closely, the structure here is forming a bearish continuation pattern. That suggests we might first see a minor move to the downside. There's also a possibility we'll get a double bottom forming right around this support zone, which would strengthen the bullish setup even more. Despite this short-term bearish look, our bigger picture bias is still bullish. So in this case, the best thing we can do is wait for that break above structure, and then look to join the move safely on the way up. No need to force trades. Let price come to you. All right, now let's take a look at USDJPY. We're starting on the daily time frame to establish a solid long-term bias. And the first thing that stands out here is the strong support level down at the bottom. Price rejected this zone once, came back for a second touch, and then rejected it for a third time. That triple tap on support shows us that buyers are clearly defending this area with strength. Now, if we move our eyes to the top of the chart, we've got our main swing high right here. Just below that, we have another significant high, and then the last high sitting just beneath that. Keep in mind, we're still on the daily time frame, so these highs are major structural levels. They represent key liquidity points and will act as future targets or reaction zones. So, based on what we're seeing here, it's very likely that price will continue pushing up, at least toward this first key high, if not further. Now let's drop down to the 4-hour time frame and zoom in for more precision. Looking at this chart, we can see a series of descending lows. Here's the first low, then a second lower low, and finally a third even lower low. That first low was taken out by the second, and both of those were taken out again by the third. This repeated liquidity grab hints that sellers may be running out of steam, and buyers could soon step in with momentum. It's a classic setup that tells us start preparing to buy. Our immediate target would be this high right here, which also lines up nicely with our structure from the daily time frame. Now let's jump down to the 1 hour time frame to really get into the details and hunt for opportunities. What we're seeing here is a clear impulsive move to the upside, followed by a correction, then another impulse and another correction. Again, another impulse, followed by the most recent corrective move. This structure is clean. It's textbook trending behavior. Based on this flow, we can now anticipate the next leg to be an impulsive move to the upside. That aligns perfectly with both our 4-hour and daily bullish bias. So the game plan here is simple. Stay patient, monitor price action around the correction zone, and look for confirmations, like break of structure or bullish candlestick patterns, before entering. Our goal is to ride the next impulse, ideally toward that 4-hour target high. All right, this time around we're dropping down to the 15-minute time frame to look for actual trading opportunities. Take a look at this structure. Right here we have a low, which gets taken out by a lower low, and then that low is taken out by an even lower low just beneath it. Perfect. This series of lower lows shows us clear signs of liquidity being swept from below. Now, over here on the right-hand side, we've got our area of value. After going through all the higher timeframe analysis, it's now safe to start looking for buying opportunities within this zone. Our target? This high right here. You see how systematic this is? It's repeatable. If you follow the structure, stay patient, and time your entries well, you can make money trading. This isn't about luck. It's about understanding how the market moves. Now, let's take a look at the current price. You'll notice that we don't quite have our classic 3-touch structure just yet. But over here on the right, we do have a key level that price has tested multiple times. So what we can do now is draw in something like a counter-trend line or a short-term resistance zone. That way, if price breaks above that structure, we can enter on a reduced risk setup, waiting for confirmation instead of guessing. Our target remains all the way up there. But as we all know, the market doesn't move in a straight line. So we should expect a bit of a bumpy road, minor pullbacks, fake-outs, even temporary consolidations. But as long as structure holds and our bias stays intact, we stay in the game and manage our trades accordingly. All right, next up in line is US100. We're starting off on the daily time frame to get a sense of the bigger picture. Now check this out. We've got a clear high sitting at the top, followed by a lower high right down here. Recently, price came very close to tapping that lower high again, but didn't quite get there. Ideally, what we'd want to see here is a proper liquidity grab above this lower high. That would sweep out any stop losses sitting above and give us a potential setup to start looking for selling opportunities. Alternatively, though, if price pushes through that zone and forms a clean structure to the upside, then we'll have to adjust and look for continuation trades instead. As always, it all depends on what kind of structure price gives us next. Now let's switch over to the 4-hour time frame and zoom in a bit. Here we get more detail. And what stands out immediately is this high, which gets taken out by this higher high right here. So if price gives us another push up, a higher high that sweeps even more liquidity sitting above, then we might have another great opportunity to start looking for sales from that area. But remember, we're not trying to control the market here. As much as we analyze and plan ahead, price can go either way, regardless of our bias. That's why we react, not predict. We wait for confirmation and structure before we commit to any direction. And that wraps up our weekly market forecast. We've covered gold, USDJPY, and US100, breaking each one down from the higher time frames all the way to those lower execution levels. Remember, trading is a game of patience and precision. It's not about predicting every move, but about preparing for what might happen and reacting with a clear plan. Stick to your bias, trust your process, and always manage your risk. If you found value in this breakdown, don't forget to like the video, subscribe to the channel, and hit that notification bell so you never miss an update. Drop a comment below if you're watching any of these pairs this week, or if there's a specific pair you want me to cover next time. Until then, stay disciplined, stay sharp, and I'll catch you in the next one. Peace.